Remember, Bitcoin is the most sensitive to liquidity. It moves first. It's a truth machine. Bitcoin on a Friday night tanking is telling us something. It's telling us there's something broken in the financial system. Liquidity is off. The fiat system is failing, okay? And you want Bitcoin to be the most sensitive to liquidity because we want it to be the best expression of currency debasement. We want it to be the best performer on the other side of the money printer. When you're the most sensitive to liquidity, it goes both ways. Yes, you react on a Friday night when the stock market can't because it's closed and when gold doesn't because it's a rock. But that means if they're going to print a ton of money, and this is the end of fiat as we know it, Bitcoin's going to be the best performer.
The noise around Bitcoin's recent drop has been loud charts flashing red, panic everywhere, and people declaring the bull run dead. But here's the thing, volatility doesn't mean weakness. It often means Bitcoin is front-running something the rest of the market hasn't noticed yet. Jack Mallers, host of the Jack Mallers Show, says Bitcoin's 12% pullback isn't random. It's a reflection of tightening liquidity in the financial system. Bitcoin, more than any other asset, reacts first when liquidity dries up. When banks are strapped for cash, credit spreads widen and yields swing violently, Bitcoin feels the tremor before gold stocks or bonds even flinch. That's not a bug, it's the feature that exposes how fragile the traditional system really is. Mallers describes Bitcoin as a truth machine. Unlike fiat assets that can be propped up by policy or balance sheet tricks, Bitcoin mirrors reality in real time. When something breaks in the plumbing of global finance, whether it's banks quietly leaning on repo facilities or foreign demand for US debt drying up, Bitcoin prices it in immediately. The volatility you see is often the signal, not the problem. And that signal is flashing again. Jerome Powell recently hinted that the Federal Reserve may soon end its balance sheet reduction. In other words, stop quantitative tightening. That's a major shift. It suggests the Fed senses liquidity stress building and is preparing to turn the taps back on. Mallers believes this is where Bitcoin shines. When the Fed pivots from tightening to easing, Bitcoin historically moves first and hardest. It rallies before risk assets catch up because it's not waiting for permission, it's responding to the return of liquidity. So while everyone else is staring at the red candles, Mallers says the real story is underneath. Bitcoin isn't crashing, it's listening. And once the Fed confirms its next move, the same crowd calling the top will be chasing the rebound they didn't see coming. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
So Bitcoin had a little, it's been a little choppy. It's had a little oopsie. As I said in the beginning of the show, it's about 12% from its all-time high 2 weeks ago. And everyone online, like the sentiment is so bad. Everyone's freaking out, thinking the bull market's over. I can't be more bullish. I literally think we have years of money printing, reindustrializing, and unwinding from the fiat regime that we know as, and Bitcoin's going to be in an open competition against gold to be the de facto money for humanity. So I wanted to put out this tweet really to calm everyone down. I said, remember, Bitcoin is the most sensitive to liquidity. It moves first. It's a truth machine. Bitcoin on a Friday night tanking is telling us something. It's telling us there's something broken in the financial system. Liquidity is off. The fiat system is failing. And you want Bitcoin to be the most sensitive to liquidity because we want it to be the best expression of currency debasement. We want it to be the best performer on the other side of the money printer. When you're the most sensitive to liquidity, it goes both ways. Yes, you react on a Friday night when the stock market can't because it's closed and when gold doesn't because it's a rock. But that means if they're going to print a ton of money, and this is the end of fiat as we know it, Bitcoin's going to be the best performer. So I said, yields are puking, spreads blowing out, the banks are stressed, and I gave some images and some data to support that. But Bitcoin is working because it smells trouble. When they're forced to print, and I mean, this whole show is about the fact that they are, it'll move first again and outperform everything. Now, Bitcoin is back above 110. Why is that? There's scarcity in bank reserves. That these banks, so regional banks, are down materially versus the too big to fail banks. Banks are in trouble. Reserves are scarce. And what he's talking about is interbank lending to meet requirements. And what happens is if banks can't meet requirements and just financial markets can't meet requirements, then risk sells off. You guys know this term risk off, right? And people say, well, Bitcoin's buckled. It's coupled in with risk, right? The stock market in Bitcoin, that's risk on. And when risk comes off, those things sell off. What does that mean? It means when there is funding crisis, like there was, and I'm telling you guys, Bitcoin smelled blood because there was blood. The reason that there was a crisis is because there were scarce reserves at the bank, and these things sell off. And so Bitcoin was smelling the fact that risk was coming off, liquidity was extremely tight, and there was borderline a crisis in the repo market. Markets started to freak out. Reserves got scarce. Guys, think of Bitcoin like a truth machine. It can't lie to you. It's the only real free market. And so don't be mad at it on a Friday night when it goes down. If you need Bitcoin's price to go up, you're too levered. You're too reliant on it. Stack sats and chill. Be humble. Relax. Go to the beach. Don't live a lifestyle you cannot afford. Just understand that Bitcoin's trying to talk to you. It's telling you something. And so what do we get immediately over the last week because of this liquidity crisis that was brewing? Powell says Fed may stop shrinking balance sheets in the month ahead. Now, all of a sudden, Jerome Powell and the Fed comes out and says, it is wartime financing. We need to reindustrialize this country. Someone has to pay for it. Here comes the money printer. Federal Reserve Chair Jerome Powell signaled that the central bank may stop shrinking its balance sheet in the coming months, so no more QT, and some form of QE is coming. Fed's Powell says the end of balance sheet drawdown process may be nearing. QT endgame gains urgency as the Fed's reverse repo nears zero. So this is a part from the article that I thought was relevant. The reverse repo facility has largely existed to mop up excess liquidity the Fed created during the pandemic, and now it has been effectively drained out. So this facility that was used for liquidity is gone. We've ran through it all. They need to print more money. They need to print more money. And Bitcoin was telling us that. It was smelling it. Just again, think of it like a truth machine, the only free market that could be honest with you. The stock market's not a free market. The gold market's not a free market. It's freer than the stock market, but it's not free like Bitcoin. Bitcoin is a truth machine, okay? The further the reserves fall, the more likely liquidity scarcity could emerge with little warning and rattle money markets, in turn complicating the Fed's ability to keep its monetary policy interest rate target where it wants to be, okay? And so now gets me to the last chapter, which is really what's next. What's next and Bitcoin over gold, okay? So this is a little bit of a weird idea. I'll try and go fast since this episode's dragged a little. But, I wanted to end with what I spend a lot of my time thinking today is, what's next? Where's this all going? So, for me, and hopefully you guys as the listeners, it's as clear as day, right? China has all the leverage. They've built an industrial power over the last 40 years. And look at this. So I read the image here. By far, the most rapid shift in the world's economic center of gravity happened from 2000 to 2010, reversing previous decades of development. So the world's economy is now east. The world's economy is east. The world's factory is China. China dominates industrial production and military. They've won for now. And that's just a fact. And we're going through the phases of grief, where it's initially denial, and then you get angry, right? And eventually we'll come to terms with it. But that's true. And so I'm thinking to myself, well, okay, this is obvious. Buy Bitcoin. No wonder gold's going up. The $1971 is unwinding. The whole world reserve currency, US treasuries are the collateral for the entire financial system. That's not going to happen. But then what? What world are my kids going to grow up in? What's past? Pull on the thread, right? I was spending time thinking about that. And really, my thesis that I kind of wanted to just rant about is I think the internet and Bitcoin become the new America.
Jack Mallers says Bitcoin isn't just digital gold, it's something far bigger. It's both a physical bearer asset and a global monetary network that runs without human trust. Gold depends on people, banks to store it, governments to regulate it, and middlemen to move it. Bitcoin runs on math. Its network verifies transactions instantly anywhere on Earth without asking permission. As Mallers puts it, gold's network is built on people, Bitcoin's is built on code. That's the fundamental difference. Gold can't scale without trust. You can't carry it across borders or send it through a satellite. Bitcoin can move billions in seconds, verified by a decentralized network that never sleeps. This shift matters because the US is entering what Mallers calls an era of wartime financing, a period of exploding debt, reindustrialization, and currency debasement. In that environment, the old hedge gold struggles to keep pace with the digital speed of global finance. Mallers sees Bitcoin as the natural hedge of this new age. It's the monetary foundation of the internet, open, borderless, and free. And as the economic rivalry between the US and China intensifies, he believes Bitcoin will stand as the real alternative, not just to gold but to the entire fiat system itself. Let's get back to the interview.
I think in order to combat China, the United States will end up finding itself being internet maximalists, being Bitcoin maximalists, right? We've talked about the China disrupted red America. So the middle of America that wants their construction job, only has a high school degree, doesn't want to be college educated and be a lawyer and all this stuff. Their jobs are in China. Their beef is with China. And the internet and Bitcoin and AI is disrupting blue America. Everyone that's got college debt and they're a lawyer, they're now, or an engineer or an accountant or whatever, blue America, white collar, they're now getting disrupted by AI. And so blue America beefs with the internet, with Bitcoin. People like Elizabeth Warren, Jamie Dimon, they hate me. I've outperformed Wall Street by just sitting in my closet doing nothing. And then everyone in red America hates China. And so what we're finding is red America is actually becoming Bitcoin maximalists. And I really think that the future of this country and the future of East versus West is China versus the internet, if that makes any sense. I really think that that's where we're going. And so I had some thoughts because everyone was asking me, well, what's your take on gold? Should I buy gold? For the record? And everyone's like, Jack's supporting gold. I thought I'd never see this day. I own zero gold. Okay. I own zero gold. I think that this is going to come down to, we have to build a distributed, resilient system. Like, this is what Balaji said. This is from Balaji. Unbelievable quote. He wrote, in other words, ideas are upstream of men. Code is upstream of drones. Private property is private keys, and the keyboard may yet prove on par with the sword. The creation of alternative societies is one model for how the internet may eventually balance out China. I really think that this is where we're going. And I think Bitcoin's going to outperform gold massively. And I think the West is going to end up relying on Bitcoin because it embodies American ideals. Bitcoin is the most American thing we have. Freedom of speech, property rights, freedom of coming and going, expressing, opining, distributed, secure. Gold is a macro trade for now, but over a long enough period of time, it is short humans. It is a short position on humanity. In other words, in order for gold to remain scarce and store the world's wealth, we have to be bad at problem solving. And again, it's so analog. The gold monetary network is us humans. Bitcoin is fascinating because it is both a physical bearer asset and a monetary network. So it's a physical asset and a network that achieves transaction finality without trust. Gold doesn't have that. The gold network is us humans. So I said, the gold monetary network is us physical humans, which obviously doesn't scale. I can't walk my gold payment to London. I'm 5'8" and 150 pounds. The ocean would eat me alive, right? I have to give my gold to a bank or a government, which are the same thing nowadays, in order to move it without walking it across town. For gold to scale in today's world, it physically has to concentrate and rely on a level of trust that has already betrayed us. And so I think the next frontier, here's just my prediction, I'm incredibly bullish right now. I think this bull market is going to go well into 2026. I think the United States is talking about wartime financing, reindustrializing this country. Fiat as we know it is over. The trade war, the rare earth war, called the bluff of the US dollar. It's over. The next frontier to be fought is not the West versus China. It's the internet versus China. And Bitcoin's going to kill gold in performance.
What's unfolding isn't just another market dip, it's a stress test for the global financial system, and Bitcoin is the first responder. When liquidity tightens and policymakers start blinking, Bitcoin doesn't wait for headlines. It reacts, instantly reflecting the real pulse of the economy long before official data does. Jack Mallers take cuts through the noise. This isn't weakness, it's awareness. Each jolt in Bitcoin's price is a mirror of the system's hidden fractures, the widening cracks in credit markets, the quiet bailouts, the rising strain beneath polished balance sheets. And when the Federal Reserve inevitably shifts back toward easing, as history suggests it will, Bitcoin won't need an invitation. It'll surge ahead, reclaiming its role as the honest measure of monetary truth in a world drowning in artificial liquidity. Gold once served that purpose, but Bitcoin has taken the torch, faster, borderless, and untied to politics. The deeper the debt spiral goes, the clearer it becomes that this isn't just a speculative asset, it's the benchmark for trust in a system running out of it. As the next round of central bank interventions approaches, will investors finally recognize that Bitcoin isn't reacting to the system, it's revealing it? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.